thank you everyone for joining us today. We had a few small difficulties in the very beginning. If anyone does have any questions, please type them into the chat box. I will address them as we go through the presentation. If there is a good spot to stop, or if we need to wait till the end, we will do that as well. But do feel free to type them in at any time, but everyone is muted for audio, so I will not hear any questions if you are asking them. So thank you for joining us today for the Self-Directed IRA Basic Facts. Today we're going to be covering the broad strokes of self-directing an IRA, what our role at Advanta is with a self-directed IRA, the different types of plans that are out there that you can self-direct, and then we'll also do a few case studies and then a few things of the things to watch out for with self-directed as well. A little bit about myself. My name is Alex Perney. I am a business development specialist with Advanta IRA. Been here since 2012, so I'm almost about 5 years in this industry and doing self-directed IRA work. I am a certified IRA services professional with the Institute of Certified Bankers and a member of the American Banking Association, so I am very knowledgeable on everything regarding self-directed, but also have a good depth of knowledge on anything that regards more traditional type plans like 401ks and employer plans. So if you have something that's a question not necessarily directed specifically at self-directing an IRA, feel free to ask us. I can probably get you a very good answer for that as well. Before we start, as always, we need to give a little bit of a legal disclaimer. Advanta and our employees, we do not provide any legal, tax, or investment advice or endorse any investment products. All the information we're going to be covering today is for educational purposes only, and we do encourage you, before entering into any type of financial transaction, to consult with a financial expert or an attorney to make sure that it is a viable investment and a sound investment for you to be making, as we do not provide any of the due diligence or the research on whether or not it is an investment suitable for you. Here's our agenda today. We're going to be going over the definitions of what self-direction is. We're going to be covering more about our company. Then we're going to be delving in to the types of plans, your options, and a few case studies at the end. So just because your questions might center on something a little bit later on, feel free to type them in. I will catalog the questions and address them as they come up. So please get those questions out there and ask, because not only do you get your questions asked, but it also helps a lot of other people as well. So the benefit is twofold in that you help yourself and the other people that are attending today. So in its DNA, an IRA is exactly the same anywhere that you hold it. A self-directed IRA is differentiated from the masses of IRAs in that it's in a unique type of record-keeping arrangement that you have, that we allow you to invest in alternatives that can be built tax-free and tax-deferred so that you can better utilize the diversity that you want to have. So you're not going to be limited to just having stocks or bonds or mutual funds. We at Advanta are going to specialize in allowing you to really use your creativity and your network of professionals to help you build that retirement in the way that you best see fit. The essential term of self-directed IRA is that you get to choose exactly what you are looking to invest in and not be necessarily forced into doing something that is only provided by the investment provider. Since we don't endorse or provide or sell any products, you as the client are the one that is going to be bringing us the investment that you have done the research on and that you are comfortable with. So by being able to take that control, we allow our clients to invest in things such as real estate. You can hold mortgages and notes, different types of private placements, metals such as gold, platinum, palladium, or silver, and the list really kind of goes on. And we'll get into that a little bit later on within the presentation. But essentially, just understand that a self-directed IRA is an IRA that you hold with a company such as Advanta, that we specialize in allowing you to hold different types of alternative assets that are not normally allowed to be held at any other type of IRA administrator. So with that said, Advanta, we are a self-directed IRA administrator, and the only business that we have is self-directed IRAs. We don't handle any sort of stock, bond, or mutual fund accounts or trading accounts, with the small exception of foreign exchange trading that some people do. But we are a very experienced company with over 20+ years of self-directed IRA administration. We use FDIC-insured accounts to hold all uninsured invested cash for you. So any cash that you hold is still going to have the traditional FDIC $250,000 or $250,000 limits that you would see at any other more traditional bank. Our clients hold a wide variety of investments with Advanta, and currently we hold over $700 million of assets for our clients and also utilize a network of trusted CPAs and attorneys to help assist them with making their investments. And the last point that we really like to make sure that people realize is that in so many other different types of banking, and especially even within the self-directed IRA community, there's a very hands-off approach to the way that companies treat their clients. We try to fix that by having a dedicated account manager system where any client, no matter if they are a $10,000 account, $5,000 account, or a $5 million account, gets a dedicated account manager that assists them with everything they need to do from the initial transfer in of cash to their first purchase, their fifth purchase, and any different type of asset. You don't get a different department for each time you want to do something different. You get a singular point of contact that will guide you through everything you need to do with your account and help make everything as seamless and smooth as possible. So with that said, the account manager and our system that we have in place is a very simple process to go through in order to get started with self-directing. The first step in this process is apparent enough in that you have to open the account. So the easy way that we have to open your account is that you just complete our account application, which is just a few pages, send us in a signed copy along with your driver's license, and that gets your account open. Then we need to move funds into your account. So if you have funds currently in an IRA, it's as easy as us just requesting that they be moved over. If it's currently in an old employer's 401k, you just need to tell your 401k administrator to roll them directly to your IRA, and you don't have to pay any taxes or penalties on that money. It all stays qualified, and you get to use that entire amount of cash for your self-directed IRA investments. Once the account is funded, you just contact your account manager, and then you start working on the investment that you'd like to purchase, whether that's a piece of real estate for rental income, a fix and flip, a mortgage, or any other type of self-directed investment. That's the third final step to your IRA investing, and that's how it works. Very simple. Although we don't provide any endorsements or research on the products that you ultimately will be selecting in your self-directed IRA account, we like to make sure that we help our clients educate themselves as best as possible when it comes to the information that they're getting regarding the types of investments they're doing. So just like this, where we are doing a free online webinar, we also host an Advanta on demand, which we in turn put all of our digital content such as webinars and other recordings on our YouTube page. So I'd encourage you to go to advantaira.com, YouTube/AdvantaIRA. Check out our videos. We host all of them up there, everything from the most basic 101s to the more in-depth on specific structuring of deals. So it can be really helpful for you. So please make sure that you click like and subscribe. It will really help us get better content out there for you. And then lastly, we also maintain a weekly and sometimes daily updated blog with different insights from industry professionals as well as from current administrative changes that will be happening in different regulations with IRAs. So please do check out our blog and our YouTube. It really will get you a lot of very updated information very quickly. And lastly, if you need some additional information or some additional clarification, schedule a consultation. We don't charge for our time when it comes to giving us a phone call, even if you're not a client. We can get the question answered for you typically a lot quicker than maybe an attorney or a CPA, so long as that it's not specific enough to be advice for you. If it's just a general question about IRAs, use this as a resource, not just with our content that we put out, but give us a phone call, and one of us will be more than happy to help you. So before we get into the different types of plans, Joe asked a good question. Can you open multiple self-directed IRA accounts or multiple checkbook LLCs for the same client of yours? You can certainly have as many IRAs as you want, and that's not just with regard to a traditional type of IRA where you have maybe stocks and bonds in it. You can have an account with Advanta. You can have 4 or 5 accounts with Advanta, and we certainly have clients that do have multiple accounts for various different reasons. Now, for those of you that may not be familiar with the second portion of that question with the checkbook LLC, The LLC is a different type of structure you can do within an IRA. We're not going to really touch on it so much here because it is a little bit more of a specific type of investment. But to your question, Joe, you can have several different LLCs held underneath of your multiple different IRAs that you would potentially hold at Advanta. That's certainly not a problem. And there's different reasons for wanting to do that. And if you'd like, give me a phone call after this or shoot me an email, and we can kind of go over a little bit more in depth of that. But I just like to keep it relatively broad strokes for this to make sure we don't confuse anyone. So thanks for your question. And let me just mark that as answered. All right. Okay, so now there are many different types of retirement plans that you have, and many of them fall under the same umbrella of IRS regulations that will allow you to self-direct it. So it's not just the traditional and Roth IRA that you can look at to do self-direction with. You can also self-direct many other different types of plans. Now, up on the slide right now, you can see the broad points of the different types of plans. Now, let's get a little bit more in depth into what each one of them is. So the traditional IRA is probably what most people are inherently most familiar with. It's the oldest type of IRA, and it's definitely the most used. A traditional IRA is a pre-tax retirement account, meaning that you potentially get a deduction for adding money in. The money grows tax deferred, so you don't pay any taxes on the growth of everything in the account, and then you pay only ordinary income tax once you take money out of it at retirement. So the nice thing about that is that potentially when you retire, you'll be at a much lower income bracket and much lower taxing bracket. So you're going to be paying less taxes than you would if you had a ordinary amount of taxation with the growth if you weren't doing it within a tax-qualified IRA. Now, this is really good for people who want a lot of deductions. So you're paying money on the fruit you pick off the tree and no tax on the seed that you plant to grow it. So people really like that for various different reasons. If you need a lot of deductions or if you want to try to mitigate your personal taxation at the onset of the account, makes a lot of sense. However, in growing in popularity since 1998 when it was incepted, the Roth IRA has a lot of other interesting benefits to it as well. So instead of having a deduction for adding money into a traditional IRA, you add money in after tax to a Roth IRA. So you've paid tax on that seed, and the very interesting part about this account is that you pay no tax on the fruit that you take out in retirement. So everything truly grows tax-free in a Roth IRA. You do not You do not need to have to worry about any sort of taxation over the life of the account, just like with a traditional IRA. However, in the end of the account, when you start taking money out, you pay no taxes. Now, that is a very intriguing and potentially beneficial point of the Roth IRA. However, again, you don't get a deduction for adding into it, and there are some additional restrictions on how to get that money out tax-free. So in order for a Roth distribution to be tax-free, you must have had the account open for 5 years, and you must be of the age of 59 and a half. There's some other more specific taxation rules with regards to the distributions. Anyone has any really specific questions, I can definitely get into that. Send me an email or give me a phone call. But the basics is, so long as the Roth IRA has been open for 5 years and you have reached the age of 59 and a half, everything from that account can be distributed tax-free. Again, tax-free with the Roth. Very interesting. Now, moving over from left to right, the two that are diagonal from each other, the SEP IRA and the SEP IRA, the Simple IRA, and the individual 401k plan are plans that cover businesses. So whereas the traditional IRA and the Roth IRA are specifically for individuals, people that either are self-employed or own a small business can really benefit from having the higher contribution limits of an employer plan than they would with a traditional or Roth IRA. So a simple IRA is horribly named in my opinion because it is the least simple thing on the planet when it comes to calculating how much income you can put into from your company. And essentially it is the older, more antiquated version of a SEP IRA. The simple IRA does have still use for certain individuals and companies that are looking for certain types of deductions, and that plan can make a lot of sense. But more and more, we're seeing a trend towards the use of the SEP IRA, which is the Simplified Employer Pension Plan. This is a type of IRA that is used by people that have small businesses or are self-employed to be able to contribute a significantly higher amount than you would with a traditional or Roth. As of 2016, you are able to contribute out of your paycheck as an earned income contribution $5,500 or $6,500 if you're over the age of 50 and a half into either a traditional or Roth IRA. With a SEP IRA, you have a significantly higher amount that you can contribute. Now, your deductibility is going to be maintained on your personal taxes in this case because you're contributing a portion of your base salary. In a SEP IRA, you can contribute up to $53,000 or 25% of your base salary into a SEP IRA. So that's all going to be personally deductible to you, so you can bring your total contribution into that account up to $53,000 a year. And again, the same taxable implications that go along with growing tax deferred are still going to be in line just like they are with the traditional IRA. So the SEP IRA is basically a traditional IRA on steroids that utilizes the portion that is established for a business that you contribute into a part of your base salary. Now, a lot of people are really familiar with 401ks. They've been around since the 1970s. They're what's used for a lot of companies to help incentivize people to stay and perform by offering a contribution on behalf of the company and the individual putting money in there as well. Now, for individuals who are self-employed, we offer an individual 401k plan that you can self-direct. The nice thing about this is, like the SEP IRA and the Simple, it has a much higher contribution limit. You can contribute $18,000 of your personal money into it, so money out of your personal paycheck, which is called an elective deferral, and then you can contribute up to, oh, my apologies, oh, let's see there. You can contribute up to $35,000 from the company as well. So you can bring your contribution limits up significantly higher by using an individual 401k plan. However, the difference between the SEP and the individual 401k are where you take your deduction. And that's something to get with your CPA about if you're interested in that type of plan. Now, the last two, which are much less commonly seen as self-directed, but people certainly do utilize them in self-direction, are the education savings and health savings accounts. Education savings accounts are capped at $2,000 per year per beneficiary. So each ESA that you would have, potentially you can put $2,000 a year into. And a health savings account for individuals is $3,750, and a family plan is $6,750 as well. Now, you can certainly utilize either of those accounts to self-direct. They're not as common, but if you're looking to maximize the amount of deductible contributions you have to different plans and you qualify for having either of those two, you can also self-direct them as well and get the tax benefits of tax-deferred, tax-free growth with those. So if anyone has any questions about these and more specifics, feel free to send me an email or give me a phone call, because these I could do a whole presentation for probably 3 hours on just the benefits and the different regulations regarding each one of these plans. So investment options. A lot of people want to know, what are my options with a self-directed IRA? Well, so much more than just being self-directed is understanding how to identify the different types of investments that are out there for you. So there are a myriad of different investments, and these are just a very brief cross-section of what the majority of our clients do. Now, it reads from left to right, with the most common being real estate, and probably the least common but still available options being things like futures and foreign exchange currency trading. But we're going to kind of focus on the left-hand side of this. So real estate in all of its different forms is a very popular, about 70% of our business, in fact, is real estate in some form or another. Now, that kind of goes right along with the notes and mortgages directly to its right and the single member LLC directly below it, as all three of those typically work and function in the same manner with real estate. So real estate, and most people are familiar with, is going to be buying a piece of real estate and then renting it out. So the IRA would transfer money. We would transfer money into your Advanta account. You would then in turn instruct your dedicated account manager to work with you to buy the real estate, then all of the real estate income, whether that is the sale proceeds from the fix and flip, whether that is the rental income, is all going to flow back into the IRA tax-free. Now, when I say tax-free, that's just in reference to the taxable situation at the time of the investment. So in a Roth, traditional, SEP, simple 401k, you're not going to be paying any sort of capital gains. You're not going to be paying any sort of ordinary income because it's all underneath a tax-deferred entity. So the IRA actually owns the real estate and is going to be receiving any of the income from it. So with rental income, you avoid any ordinary income throughout the year. With a fix and flip, depending on how long you've held it for, you avoid any sort of ordinary income and capital gains on that, depending on either 15 or 20% short or long-term capital gain bracket. So you get to hold a much higher percentage of your money in there to invest, and then in turn reinvest as well. And I have a very good illustrative slide that kind of shows exactly that. So please make sure that you pay attention once we get to the case studies in about 3 slides. I'll really show you how powerful of a tool that is. Now, the other part of real estate for people that have purchased real estate personally is mortgages. So instead of maybe your IRA buying the piece of real estate and then getting rental income or fix and flipping it, you can get principal and interest payments from your IRA investment in the form of issuing someone a note or mortgage. So if someone comes to you and says, hey, I want to buy this house, your IRA can act as the lender. Your IRA would hold the note and mortgage in its account, would receive principal and interest payments, and then also the payoff at the end of the cycle of the loan, and also would be secured by the lien on the property. So if the individual doesn't pay, your IRA would foreclose, and then the IRA would own the property. Now, single-member LLCs, as Joe had kind of alluded to in his question, are something that you can utilize underneath of an IRA to stand between the IRA and the actual investment. If anyone has any specific questions about that, as this is a very introductory presentation, just get my contact information at the end of the slide, give me a phone call or shoot me an email, and we will definitely get into specifically single-member LLC information. But we also do have a presentation I did a few weeks ago on our YouTube channel if you'd like to get some more information that way as well. Now, moving away from the real estate-centric investments, people also like to utilize self-directed IRAs for private placements. So private placements are varied as they are different. You can have a private placement that is involved in just about any type of industry. So what is a private placement? It is a private investment in a company or entity that is not a publicly traded or openly offered investment. So this can go anything from accredited investor type investments where you have to meet certain criteria to have an investment in it as it's very speculative, or it could be as simple as buying private bank stock from your local bank that you've banked with for 30 years. You can hold those types of investments and get the potentially very high upside in those investments through a self-directed IRA. So just as you would personally buy a piece of private stock or personally invest in a company, buying private shares or private stock in a company, you would do that just directly through the IRA. No difference than essentially the structure. It's just going to be the difference in the holding of the asset as opposed to being personally held. It's held in the IRA. And lastly, foreign exchange trading and futures trading, you can establish brokerage accounts with different foreign exchange trading companies. They don't act as their own trustee or custodians for IRAs. So if you want to enjoy that type of trading within your account, you would just open it up in the name of your IRA and then move forward from there. So those are kind of the more advanced level things. In all honesty, the futures, Forex, and some of the private placements. Again, if you have any questions, get my contact information and I can go into those in more depth. Now, what people will probably get a lot of benefit out of as opposed to just the types of accounts and the types of investments, we're going to do some case studies here. Now, these are based off of experiences that we have actually seen, and a little bit more background about myself. I actually did account management for us for about 4 years. So I actually had hands-on experience with doing investments for clients and doing the processing and all of the compliance that went along with doing these types of things. So I have a very good base in looking at this, as well as the case studies that we're looking at. They are based on what I've seen clients do. Now, these are not typical and nothing that is done here as any sort of reference of guarantee of return, but it's a very good illustration to show you exactly how people have structured things and how the cash flows and the profits work within these types of investment structures. So as Advanta does not provide any sort of investment advice or investments for you to actually select from, how do you find the deal? Well, the great thing about the service that we offer is that we allow you to use your professional network and your colleagues and associates that you have spent years building those relationships with to help you grow your retirement. Now, most people, and I'm going to make a wild guess and say everyone in this presentation, isn't going to be intimately familiar or have a good network of people with the companies they invest in the stock market. But you do have a very good networking group of people that have probably helped you out and you probably know and can ask good questions to with regards to the investment you would do in a self-directed IRA, such as real estate networking events, real estate investment clubs, local different civic organizations. People that you have built those relationships with are the ones that you can use to help build your retirement with a self-directed IRA, because you are going to be inherently finding these same types of investments that you'd be doing personally with them. Now you're just using your IRA to help grow your retirement. So being able to use your network of individuals that you have spent years growing and cultivating is the really big benefit to using a self-directed IRA, because you get to invest in what you know, but also with who you know, which is an incredibly powerful tool that we help you utilize at Advanta. So some of the general rules and guidelines for investing with a self-directed IRA before we jump right into the case studies is that assets need to be newly acquired. So you can't purchase anything that you currently own. So if you currently own a property at 234 Main Street, you couldn't put that into your IRA or buy it from yourself. You would have to buy it from a third party, someone that is not a disqualified individual from you. The disqualified individuals being your mother, father, son, daughter, or spouse. But brothers and sisters are okay, neighbors, friends, anyone else that you know is perfectly all right to deal with an IRA. All assets must have a readily determined value. So you can't invest in anything that has a value derived from collectability. So that would be things like rare coins, stamps, old bottles of wine, things that are subjective in value and that are not readily determined. Anything that has its value derived from collectability is not an allowable investment. An IRA can also not hold a life insurance policy. So those are the two things that you basically cannot purchase, which is things that are collectible and life insurance. And the people you cannot deal with, again, are your mother, father, son, daughter, and spouse. So those are the individuals you need to watch out for, and those are the two things that you cannot invest in. Now, additional considerations to look at when investing with a self-directed IRA is all of your expenses need to be paid from the IRA. If you are looking at, let's say, a property, and the property is $100,000 and you have $103,000, maybe looking at buying the property that is a little bit less. So if you have $105,000, look for the property that's maybe 95 or 90. That way you have a good buffer to pay for any repairs, pay your taxes, if you don't have a readily lined up tenant, things like that. So make sure you have the ability to pay for those expenses related to your investment. And that's just really specific with real estate. There's other expenses that go along with other types of investments as well. If your IRA is inherently a little short on funds for a deal that you would like to do, look to partner. There is the ability to borrow within an IRA. We're not going to get into that in this presentation. The way to kind of streamline that for you, especially with the topic of this presentation, is to find someone to partner with. Now, as I said previously, you cannot buy something directly from yourself, but you can partner with yourself. So long as that you are both coming in on the same side of the investment, meaning that I am partnering with my IRA to buy a new asset, you can make a deal work like that. And you'd be purchasing it as a tenant in common, and all the expenses and income are split along those lines as well. Shauna says the screen is black and they don't have audio anymore. Is anyone else having an issue? Everything is still up on my end. If anyone would type in a quick response. Okay. Everyone can see. Shauna, sorry for the issue. Maybe wiggle your mouse, or maybe your computer went to sleep. Um, but going on, so with that, in a partnering situation, all of the income would come back in the percentages that you had purchased with your IRA and yourself personally, or any other partner that you bring in. It doesn't have to be yourself. You can partner with anyone that you choose, just as a matter of information. I always like to tell people is that just because you can't get into the investment wholly within the IRA does not mean you cannot make it work. Give us a call, shoot your investment idea by us, and we can kind of help and guide you in the direction of what things might make it work, and how to potentially get that to be an investment for your account to help get those growths and tax deferred and tax free investing accomplished. So the continual revenue stream. Sorry, I guess I forgot to delete one of those points. The point about the trustee does not apply to this. So all of the income come back to the IRA. The important thing to remember is that any income derived from the investment comes back to the IRA and the percentage of the IRA owns of it. So if it owns 100% of the property, it gets everything. If it's split with something else, it just gets split along those lines of interest. So just a good point to keep in mind. Okay. Getting into purchasing assets. This is probably what a lot of people will find most beneficial, with exception to the types of accounts. Now, when you purchase an asset within an IRA, it is going to be titled in the name of the IRA, as the IRA is a separate entity from you personally. So the asset, whether it's going to be a rental property or anything else, would be titled as Advanta IRA, FBO, which is for benefit of John Smith, which just stand in for the client, and their IRA number. So that's what's going to go on a deed for a property purchase. It's what goes on the recorded mortgage and note for a lending situation. It would go on a stock certificate for a private placement. Now, all of the funds were going to be coming from the IRA, and the purchase would be made from partners would be done as a tenant in common. So instead of the just Advanta IRA FBO John Smith, it would be as to a blank percentage of undivided interest along with the other individual as to their percentage of undivided interest. And all of the income coming back into the IRA tax-free. So assets are titled in the name of the IRA, and all of the income that it gets is going to be tax-free at the time of realization of that income. So the first case study in doing real estate, and again, this is based on things that I have seen with our clients, and nothing that we're going to cover is neither guaranteed nor typical, but it's just a good idea to give you a picture of how this could potentially work and how the money comes back in and how it flows. So John Smith identified a property being sold as a short sale. He had an offer accepted for $120,000, and the deal was funded and closed wholly within the IRA. So John had about $130 in the account, let's say. He bought it for $120, and now the IRA owns the property. John found a tenant and rented it out of the IRA to the tenant for 2 years, $1,200 a month. So that's $28,000 over the course of 2 years that his IRA received tax-free. Now, assuming that there's very minimal expenses, the property is then sold for $50,000 of upside profit. So he sells it for $170 in 2 years and makes $50,000. So no taxes are paid on any of the income. So the $28,000 that was from the 2 years of rental and the $50,000 of profit that he made on selling the property, no taxes is paid on that, whether it be income or capital gains. He gets the full $78,800 minus anything they pay as far as taxes and small expenses back into the account. So now John has $198,000 to invest in 2 years. So he went from $120,000 to $198,000 in 2 years. And keep in mind that when he receives that money back, he's not going to be paying any taxes on it. So that's the full amount he gets to invest. He's not having to worry about withholdings or paying any taxes or anything else. So you get a much higher percentage of your money back to be investing. So the amount that you can potentially grow it can be increased because you don't have to worry about paying taxes within the IRA. So the very interesting thing to note is that the growth potential here is really good because you're not having to take out the taxes from the equation of what you're going to be investing. So the other side of real estate is going to be lending. So if your IRA, or by extension, you don't necessarily feel comfortable or aren't necessarily the best person at identifying a piece of real estate, but you personally have a lot of good experience and good knowledge in lending people money, this is something where it's good not to necessarily reinvent the wheel. If you know what you're doing personally, use that experience in your IRA. So if you don't know how to pick out a property, but you can very well pick out a good mortgage or someone that's going to be a very good payer on a note, lend lend money out of the account. So the first type of most traditional lending that you see is going to be mortgages, where someone lends to someone in order to purchase a home. Then the second type that kind of goes the opposite of having a secured lien on a property, so a mortgage, person doesn't pay, you foreclose on the house, and the house becomes your IRAs. An unsecured loan, you're lending someone money with no guarantee that they will pay you past just the fact that they have promised to pay you. So you would have to personally go after the person if they didn't pay. Typically, with unsecured loans, you're going to see a much higher interest rate that you could charge, so the potential for the growth and the profit on that could be a lot greater, but inherently the risk in not being repaid and not having any sort of security on it would be a very real concern that you would need to look at when doing that type of investment. You could lend to a business. If a business needed money to cover a shortage in payroll, or they needed something for new capital equipment, you could certainly lend them money in order to get that done, and also come to an agreeable term for that loan. And then lastly, investor loans. So people that are looking for money to complete an investment, something short term, maybe it's a real estate investor that wants to get a piece of real estate quickly and then sell it quickly, would need to borrow money, but inherently it might not be secured by a first position mortgage as a more traditional type loan would be. The unsecured business and investor loans all typically are going to carry a higher interest rate, so your IRA could potentially be making a lot more money off those. However, there are risks associated with doing those types of lending. So with lending, here's a few case studies that focus specifically on this. Now, Sam has a network of investors in South Florida. The Roth IRA acts as the lender to the investors and the flippers. Now, instead of doing a hard money, like we had talked about in the previous slide, all the loans in this case are going to be secured by a first mortgage. All of the interest and the payoffs for the loans are paid back into the account tax-free. Now, this is really interesting because with it being a Roth IRA, not only is he getting everything back in tax-free with regards to the interest and the principal repayment, he is also going to be taking any distributions out of that account tax-free. So he's never going to have to pay personal income taxes on any of the growth or any of the basis in that account. So a very powerful tool if you would like to make a Roth IRA work, and that's kind of how it's illustrated as well. And one of the largest accounts at Advanta only does lending. So it just goes to show that just because you don't have the potential upside of getting, a great return on your investment for rehabbing and flipping a house, there is very large potentials of money to be made with doing mortgages. It all just depends on what you're comfortable with and what you understand the best as to which one makes the most sense for you ultimately. Now, with an unsecured loan, in this case, Jane knows a contractor that flips properties. She lends money from her IRA for the rehab. Now, the IRA is going to receive interest-only payments for the term of the loan, so that way, when the loan is repaid, she will have made however many months of interest, and then also will have the principal repaid. And the principal in this case is repaid once the project is finished and sold. She used her network of people that she knew in real estate to identify someone that she trusted and was a good investment for her to do multiple investments with, and then get the benefit of having interest paid as well as the principal repaid once the short-term investments were done. So two completely different types of loans utilized in the same basic type of structure with lending for investors. So I hope that kind of illustrates how the two differentiate and how the two most basic types of lending can be utilized in an IRA. Now, you don't necessarily have to be lending to an investor. You can lend to, anyone for what they need, just so long as that you are making sure that you are following any and all applicable state regulations with regards to lending. It would just be something you'd need to check with an investment professional on. But you can typically make any type of structure work within an IRA, just making sure you keep good lines of communication open with Advanta and your account manager as to how you're trying to structure the deal. Now, just a little bit of an illustration. Those are going to be the two main case studies we get to, just as this is a good overview of IRAs. So, allowed and not allowed investments. A rare gold coin would not be allowed because it derives its value from collectability. However, certain types of gold are allowable in an IRA so long as that you are buying it for its bullion content and not for its collectible value. So, American Gold Eagles that are newly minted, you're buying it for the ounce of gold that's within it, that's fine. A 1923 American Gold Eagle that's worth $1 million potentially not allowable because its value is derived from collectability. You could sell an IRA property to your brother. As we said previously, you cannot directly buy or sell anything to your mother, father, son or daughter, or your spouse, but you can certainly transact back and forth with your brother or sister. You just need to make sure that it is on a fair market value basis. Fixing an IRA property yourself. You need to make sure that any sort of work that is done to an IRA property is done by a third party. It cannot be done by any one of the disqualified individuals that we just discussed, and it can't be done by yourself personally either. It's what's called sweat equity, and the IRS explicitly forbids that. It would be a direct personal benefit, and essentially their line of thought is that you're getting an artificial inflation by doing the work yourself to your IRA. So they don't allow it. It is unfortunate, but there is a lot of benefit to doing other things in these accounts that far outweighs that. Chris, does this include paying utility bills? Good question. Any sort of bill or invoice that you receive for your IRA on property would just need to be sent over to Advanta, and we would pay it directly out of the account. You could even have it mailed directly to us, and we'll automatically pay it so that it doesn't lapse or anything. The utility bills, if the IRA is responsible for paying that. Let's say the tenant in the property is agreeing to pay the utilities, then that would be their responsibility to pay them. But if the IRA needs to have it on, if you're doing a rehab and you need to turn power on, the IRA would need to pay that bill. And buying foreclosures. You can buy foreclosures. You can buy any type of real estate that you'd like so long as that it doesn't come from one of those disqualified individuals. There's no specific regulation stating that it has to be an income-producing property. Excuse me, or it has to be done for a flip. You can buy raw land. I have clients that buy land for timber rights. I have clients that buy land just for appreciable value. You don't have to have any sort of approved investment strategy. It's just what you feel comfortable doing, and what you ultimately want to get out of it is going to determine the type of asset that you purchase. So keep in mind that just because it's not the most traditional or it doesn't fit into the generally prescribed whole of what you're looking of what people typically do in real estate or any other type of investing does not mean you cannot get it accomplished with a self-directed IRA. So keep an open mind, keep the lines of communication open, and we can typically make these types of investments happen for you. We get everything from the very easy and, let's say, vanilla flavor of things all the way up to the very complicated, and so long as that we can just make sure that we get someone on the phone and talk it out, we always typically are able to make things like that work. So with that, that is the end of our presentation today. Let me put up my contact information. I wanted to try to make sure we kept this one very light and without getting into anything too complicated, as this was billed as a introductory to everything. If anyone had any specific questions or anything is kind of leaving you scratching your head that we covered today briefly, I encourage you to go to watch it on our YouTube channel again, maybe get some questions written down, or if you'd like to give me a call directly, I have time this afternoon. If you'd like to give me a call, give me a call, 2 o'clock to 5 o'clock, and get those questions answered for you. My contact information is up right there. Feel free to send me an email. I will be a little bit unavailable Wednesday, Thursday, and Friday. I will be at a trade show, so if you do need some questions answered, shoot me an email. I will be checking my email and available on my cell throughout the rest of the week. So use me as a resource. Use any one of my colleagues here as a resource. We want to be there for you to get your questions answered. And again, we're not going to charge you a fee for calling up, calling up and asking your questions. So use this as a resource. I'll leave this up here for a few more minutes. And again, the recording will be on our YouTube, so please do like and subscribe to that for all of our new content regarding self-directed IRAs. And thanks for joining us today.